Hi, welcome to your carrier update brought to you by PowerFleet. I'm Mike Vincent. He's Zach Strickland. Spill the tea, brother. What's going on?
Spill the tea. I love it. I've got our outbound tender rejection index, and I've got this mysterious white line to show up.
It is very mysterious. I love it.
Because over the last couple of days, we just won't go below that line. I put that line there, not just to say, okay, things have kind of gone horizontal here over the last few days, but to compare it back to some of our previous
other
history
troughs.
here. Yeah, we've got troughs down here in January and February. You know, we did dip below there right before the winter weather event.
Yeah, the great Texas freeze.
Yeah, the great Texas freeze, but only for a second.
And this rising out of the ashes of the first wave of the pandemic, right?
In July,
panic buying,
yeah.
Boom, that we all thought.
It's interesting because it's almost a year ago, if you ignore this little part, that we were at this level last time.
That's right.
Yeah.
Be right about here.
So it's an interesting phenomenon where we have found a floor, about 21.4% on the tender rejection index. So not as volatile as we've been on the aggregate level.
So it sounds like it feels like we have. Do you think that this latest, we went from 10 to 30 now ships sitting out in San Pedro Bay again, right? Is that going to blow this up again and suck all the capacity of the West Coast? I mean, we'll have to see, I suppose.
Well, we'll talk about that here in just a second.
Good.
But
Beautiful.
Let's look at our demand chart real quick. So you notice the line really, with demand, we really have been below where we've been a few times over the last little bit.
Yeah, sure.
But it's, still well above where we were in February and January. And of course, all the way back there in August of last year. So demand still extremely high. It has come down over the last couple of days, however. Tender volume index here showing some easing, but could this be like the July lull, type impact? But it's still nowhere near the contraction we've seen with the rejection rate. So demand's still high.
Right.
Rejection rates coming, they're basically plateaued, but they're lower than they were. So contract rates doing a little bit of work.
They definitely are doing a little bit.
But it looks like they can't do any more, at least at this point in time, they really can't make any more headway than that 21.4% because demand is so high.
Yeah, at some point, demand is actually higher than the capacity can't fulfill it. Just can't do it. It's not a matter of I can make more money in this market than that market, right? It's just not there.
Exactly.
Right.
They have not had enough trucks come online yet. So let's look in the country, the map of the country, to see our weighted rejection index week over week. This is where the most significant weekly changes in rejection rates have occurred in the United States. Anything in the red indicates loosening, or reddish orange, I should say. Anything in the blue to light blue, tightening versus last week. And it is significant tightening. This is not a map that tells you everything. It's going to color everything and make something out of nothing. This is when something gets a color here, it's worth looking at or paying attention to.
Okay. All right.
We've got,
who are we gonna zero in on?
Yeah, we've got Grand Rapids, Denver, the polar opposite here. We've got Grand Rapids tightening, Denver loosening. Denver has been an extremely volatile market over the last 6 months or so.
It seems to me it pops up a lot.
Yeah. You notice our big markets, though, that we talk about, Ontario and, really not doing that much. It is a lighter orange out there in Ontario, but Atlanta's not doing it. Columbus, Harrisburg, not a lot of changes going on right now in these bigger markets, except for Ontario, which we'll get to here in just a second. So let's look at Denver and Grand Rapids real quick, just to see what our weekly rejection rate is.
Okay.
And I've got this over a year, just to put it into deeper context. You've got our tender rejection rate for Grand Rapids here in this purple line, and you can see, really, this isn't anything out of the unusual for Grand Rapids to just pop up and down. It is extremely volatile over the last few months.
It's right there. You've got Chicago just around the bend there, right?
It's not far away.
Yeah.
And then you've got Denver right here, again, falling down. We're probably going to pop back up next week. This market but the fact is the range of these, I almost don't want to minimize this, but the range of these rejection rates going from near 30% down to 23%, 27% to 3%. Those are 4 or 5 percentage point moves within a matter of a few days. So this is a very unstable situation in both of these markets that is definitely worth.
Yeah, you've got to be paying attention on a daily basis there. Very, very tactical type of situation there, right?
Yeah, and let's look at Ontario real quick just to see where we are, because demand coming up in Ontario. Rejection rates not making a big move right now. 17.7%, one of the lowest values we've had over the summer since early May. Carriers are figuring out a way to go and cover this freight.
Yeah, they are. Yeah, exactly they are. Very nice. Thank you very much. Zach, we'll catch up with you again a little bit later in the show for an update.